Alright, back with another YouTube video. I didn't prep. I don't really know what the fuck I'm going to talk about. Psych. We are about to talk about, oh my god, you won't see me. I know you're going to miss me. You're going to miss me. And hold on, I'm back. And you probably do not care. But alright, boom. We're going to close OBS. And today, I actually have a topic. I actually have something to talk about. It's not for you guys too. It's for me. Because I know as soon as I wake up, my caveman brain is gonna reset. So gotta keep ourselves grounded. I wanted to sleep in today and not show anybody this, but nobody's watching anyways. Like I said, it's for me. So boom. This is going to be basically how to not take a D tier, B tier, shitty tier setup. Simple as that. So before we even get into this, you gotta know what you're looking for anyways. So let's go over my trade. Yes, my trade. I'm getting more entertaining. Let's be real. Alright, so boom. Today, what I do personally, by the way, this trade is gonna be very short. Okay, so boom. As you can see, I post this on my TikTok. Same name as my YouTube. But I took my TP here. Okay, spec TP here. And the reason it's short is because when I'm in Asian session, I'm always looking for scalps. I do not believe in no big move. I mean, even though Asian session is still shitting the bed, I don't believe in any big move in Asian session. Ooh, excuse me. There is no way in hell I'm about to find a big, unless it's Sunday and all that. I think of Sunday as like the weekend finally hitting the weekday. You know what I mean? Like Saturday liquidity, motherfuckers. I don't know, private deck. I don't know, but all the money gets washed in on Sunday, especially in gold, and then we slow down in Monday. You feel me? Slow down, no news unless there's news. But that's why I scalp in Asia, because it doesn't even make sense. Your kid is asleep. Everybody's asleep. Nobody's providing liquidity to this market because everybody's asleep. So how are you going to catch a trade? You know what I mean? We're looking for big moves. That's why people trade New York, because there's big moves every single time in New York session. When you're in, it's big moves because everybody's there. Everybody's awake at 8. Everybody's ready to get their money out the way at 8. Okay? At 6 p.m., I mean, like, bro, you got Tokyo. Or matter of fact, fuck all that. The reason why also New York is really big is because all 3 banks from 9:30 to 11 are running at the same exact time. That's when US, I'm pretty sure New York starts moving, enters the regime, and every single bank is moving at the same time. So it's going to be a big move, unless we obviously got news and all these hedge funds, all these companies are pulling their money back, and they're not waiting to take big trades, big moves, because they're waiting for liquidity to really be pushed in. That's why the 2 days before FOMC are a little bit choppy. You may see that. You can still trade it, but trade it with guardrails. Don't trade it trade cautiously. Take one. That means take your loss. I would honestly go one trade in FOMC. One really perfect trade. If you lose, get the hell out of there. If you see chop, get the hell out of there. You feel me? Kind of like that. It tends to get very manipulative too. But anyways, okay, that's a whole different topic about liquidity and where to be in a good trading environment. But anyways, this topic right now is about taking B tier and A tier setups. B tier, A tier, C tier, whatever. Anything below A tier, don't take. I'm not gonna lie. If you want to be consistently pulling out payouts every single month, do not take anything below an A plus setup. I'm talking like, because here's what the old me would have done. Let me show you what the old caveman brain mindset was. I just want money, motherfucker. I see this wick, and I'm like, oh, I'm in this trade. I mean, knowing me, I know where TPs are just by seeing how slow these 5-minute candles look. There's no displacement. There's nothing happening. I already know. Displacement, learning that was such a key in my trading now, because like I just know when something is just it's leaking. Like we see displacement right here. Boom, 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 boom. All these candles that need to be retraced into. But at the end of the day, displacement is when everything is just shooting and we are not touching that first fair value gap at all. We're not touching this. If we retrace into it too quickly, 9 times out of 10, it's not the direction that we're going. Now remember, big moves start off strong. They're called strong candles. Strong candles are fat, like this. But anyways, so here's the difference. This, if you're still looking long, this is a C tier setup, okay? Remember, my moves at the end of the day are off imbalances, right? If I'm taking this trade, right, and I see that the higher lower time frame is like what? A fucking not if we were changing direction off of a mid, if I'm entering a trade and I don't see no high time frame confluence, we ain't doing that. Simple as that. Right here, as you can see, we're up. We're going bullish. We're going buy side. What do we do up here? We hit this 1 hour gap. We sold off hard. Now we come back up to it. Nothing happens. You have a strong 1 hour candle. All right. Now again, this is Asian session, so liquidity is thin, manipulation is strong, and this is a manipulative session. Okay, it's weak. It's not. There's nothing much that you're gonna get out of here. That's why I tend to stay away from Asia. I learned my lesson. I blew so many accounts, but this trade was perfect. This is something I used to see back in late December, early January on my Top Step run. This was perfect. Like, I mean, we see the swing high on the 15-minute, swing low. I'm sorry, swing low gets closed under. We get a 15. And the thing is, you'll know too when you're entering in a baboon setup, you'll simply just see bearish structure is just so strong, and we have not hit one confluence that makes you go, yeah, we're gonna reverse. You'll feel it in your gut, like you feel like, bro, let's back test, and I'm gonna get my own mindset out of this. Like, you feel me? Like, boom, right? Let's say, like right here, 16 o'clock. Oh my god, 4 o'clock. I see this retrace after what did we do? We hit a fib level. Did we close below that, honestly? No, we didn't close below it, and there was a gap. Filled it out. That was a liquidity sweep in a key level, so I'm like, okay, that's profitable. Like, I would have honestly, New York session, I would have been. This ain't really doing nothing. Probably been an up here, but I would probably have manipulated, yada da. Looking for displacement at the end of the day. Honestly, this move is pretty weak. This is thin liquidity right here, as you can see. Just like, I'll still take it. Yeah, I would have been break even anyways. 5 minute, boom, break even. But right here, okay, this all started because of a liquidity sweep in a key level. When I'm taking trades, my confluences better be sweet. My macro better be sweet. Okay, that's an A+ setup right here. Fib level, high time frame, 70%, clean. We have a 4 hour gap that's hovering near this low and this low too. We took that one out, swept it, didn't close below it at all in the slightest. And then we reverse off. We're already getting candle structure off of it. But you know what? If I get stopped out break even, what I'm going to do is simply just wait for displacement to be made. Boom. We hit this. We're having a little trouble. I won't lie. Let's see. Let's look on a 5 minute. Yeah, you feel me? It's a struggle. I won't lie. Boom. Yeah, it gets stopped out. It's a pretty choppy price action. You feel me? It gets the job done. Boom. Yeah. Fib level. Hit. Little bit of consolidation, boom. What I'm really waiting for is this 15 minute, come in, hit it, shoot up. Okay, cool. All right, that's an A+ setup because we have this liquidity, we had this imbalance key level with liquidity sweep, and the key level in the liquidity sweep literally allows us. It's like key levels push us up. The liquidity sweep is like the fuel to the engine. That's like it's because they keep on. Fair value gaps are always pushing price up and down. We're literally, the market is built off imbalances. Liquidity sweeps just show us the highest point and the lowest point. Show us where our targets are to either sweep or to close above. Then we come back down, retrace near it. Those are like our marks, our fuel. But the key levels will always push us up and down. But that's what made this trade profitable. Key level, liquidity sweep, boom. 15 minute, we wait for that. Yeah, there's a little chop down there. I ain't gonna lie, I wouldn't mark it 1 o'clock. I mean, I'm already in this move anyway, so. But nonetheless, yeah, market was choppy shit. But okay, all right, boom. We already see that price is still fighting bearish side. It's already overall bearish. We have the daily break of structure. We have all this shit, and we're off a 70%. They usually don't cause reversals. They cause retraces. It's called Fibonacci retracement. You know where the retrace is. But come up here, 1 hour gap. We react to it, do a little bit of finicky, and then we just close below this. We don't even try to respect the midpoint or the whole filling of this fair value gap. So I already know, like, yo, we're bearish. Close below this. The A tier setup is waiting for this fair value gap to get filled out. The B tier setup is still thinking that we're buy side after we just had a strong sell off, and instead looking for the fair value gap plus Fibonacci retracement that got respected off of a weird level. It wasn't even off the lowest level. It was just off of a random level that you could have guessed. You'll feel it in your heart when you're trading that you're in a B tier setup. Like, bro. I mean, you could have took this trade. Good. Strong, boom, displacement. Not bad. But at the end of the day, sell side was just stronger. Sell side is always going to be stronger. That's why even though you'll get in a long and you'll probably take it to a gap, and then you'll realize, like, it won't hit no liquidity, it won't hit no higher low, it'll just go straight to the gap and then go back down, even just as strong as your buy side was. Sometimes price will do that. And honestly, you could take a double trade, but this was a B tier setup. Would you rather get in a trade off Fibonacci retracement, or would you rather get off a pure sell side fair value gap that shows you that price is bearish? Basically, think of both sides as probability. Which one has more probability? The one that's literally telling you, because if you take a trade off of this, right, you're literally getting in a retrace, right? And retraces are unpredictable. They're called I call them prediction trades. You're trying to predict price at that point, because we didn't have to retrace up here, honestly. What we could have done, we could have just filled out this gap, probably tapped inside of that for 15 minutes, or hell, we probably could have just did a 1 minute break structure and kept selling off. That's what happens in New York session. New York session is quick and volatile. Okay, you're in a B tier setup. Maybe you could have guessed and hit the fib, and maybe you could have been up in a limit order. But you feel me? The side of probability that you want to be on is the one that's guaranteed. It's simple. This is guaranteed. 15 minute close below, breaking retest. Simple. Breaking retest. 30 minute, yeah, it didn't happen. Thumb. It's gonna happen on a lower time frame. It's Asia too. I wouldn't even trade it, but I took that trade because I know. Follow your rules. But I won't ever do that again. Maybe. I don't know. I don't want to trade casual. I want to trade like a business. So yeah. Moral of the story is, please trade clean. Trade like a business. Trade on the right side of probability, and only take A tier setups and watch your income grow faster than you ever thought. You get in one mini, motherfucker. I made like 10K on paper in 2 days. No, it was 7K. That's already a 5K payout. And we're not worried about the money, okay? I just lied to myself. We just want to be up here. Remember, called self-improvement before it's called day trading, okay? The money comes with your character, okay? If I'm in a game, it's not like business where I gotta just work, build more connections. No, this is the game of mental. This is a game of being on the right side of probability and being in a trading mindset. Not a caveman brain, a trading mindset. You're getting paid for your character, just like anything else in life. Like I said, you get paid for character when you get paid for being a healthy person by getting cut up or being bulked. You get paid for being a day trader by being patient, by doing breathing techniques when you're losing. Breathing. I gotta start doing that. Breathe. I'm handsome as fuck. Literally, like, you feel me? Like, you gotta look at you guys. But yeah, nah. Literally, take A tier setups. You know the difference between B tier setup. You'll feel it. Matter of fact, I should find another example. So this bitch too long. Actually, I don't really want to find another example. I'm tired. We're gonna trade tomorrow morning. Patience, 1 minute. Follow your rules. Take it to a TP. Easy. Trading reactions. At the end of the day, we're trading reactions. We're not trading predictions. We're trading reactions. We are not market movers. We are market liquidity. We are giving to the market. We are market providers at the end of the day. So how the hell are you going to predict when the hell it's going to retrace, when the hell it's going to drop? You're not Warren Buffett. You're not Donald Trump. You are a goddamn retail trader. They don't know you. You're a small a ant in the piece of the pie. You are a cog in this machine. So please, do not bottom tick. Do not try to take a retrace trade. Please do not enter off the top of a fair value gap. It's called a breakaway. You're going to get fucked. Please take A+ setups. That's it. God bless. I'm getting off. I'm going to bed.